Hey Bitcoiners, Lockie here from Edge 21. Today we're diving deep into the current volatility affecting Bitcoin and the broader cryptocurrency market. Bitcoin has dropped sharply from 83k to 75k, a decline of over 8%, and we're here to break down what's driving these price movements, the broader market trends, and what we can expect next. Stay tuned as we analyze the key factors behind this sudden price dip and what it means for Bitcoin's short-term price action. Let's start with the big picture. Bitcoin's recent price drop is heavily tied to the broader market downturn caused by escalating trade tariffs between the United States and other nations. On April 4th, US stock indices plummeted by nearly 6%, wiping out a staggering $8.2 trillion in market capitalization. This global economic uncertainty has sent ripples through the financial world, and Bitcoin was not immune to the effects. While many would expect Bitcoin to decouple from traditional markets, recent events suggest otherwise. As US equities face a significant sell-off, Bitcoin's price followed suit, dropping 8% in just 24 hours and hitting its lowest price point of the year, trading at 75k on April 7th. This move was part of a large reaction across risk assets, all of which were affected by the fears surrounding the trade tariffs and their potential impact on the global economy. Now let's take a closer look at the root cause of this market panic: the escalating trade tensions initiated by President Trump's tariff actions. These tariffs are not just a minor blip. They've spooked investors across the globe. As trade wars intensify, fears of a global recession have mounted, leading to widespread volatility. Bitcoin, often seen as a store of value and a hedge against inflation, found itself caught up in the turmoil. The recent VIX, or volatility index, reached its highest level since the 2020 COVID-19 crash, signaling heightened market fear. The sharp declines in traditional markets have translated into a broader flight from riskier assets, including cryptocurrencies. Bitcoin's initial dip was steep, but it's important to note that it held up better than many expected. While Bitcoin was down, other assets like Ethereum suffered even more significant losses, with ETH dropping 14.7% globally and 13% on Indian exchanges. Bitcoin's decline to 75k has sparked a lot of discussions about its resilience. Despite the broader market turbulence, Bitcoin has shown some signs of decoupling from US equities. In fact, while the S&P 500 dropped 6%, Bitcoin only fell 8%, which is a relatively modest decline when compared to the larger losses across traditional risk assets. This decoupling trend suggests that Bitcoin is beginning to behave more like a safe haven, similar to gold, and less like a traditional risk asset tied to the movements of stock markets. This graph, titled BTC S&P 500, shows how Bitcoin has outperformed traditional equities during times of market stress. Notice that while Bitcoin has moved in the same direction as the S&P 500, it has shown relative strength, particularly during recent downturns. As of today, Bitcoin's support level has shifted to around $76,000. Analysts are watching this closely as it becomes a key level for any potential rebound. If Bitcoin manages to hold above this support, we could see a consolidation phase that may eventually lead to a breakout. However, if the price breaks below this level, there's a risk of further downside, with $70,000 potentially becoming the next strong support zone. The graph, titled the MVRV ratio, suggests that Bitcoin is in a cooled off state, with the MVRV ratio returning to its long-term average. This indicates that the market is no longer in an overly speculative phase, and a period of stabilization could be on the horizon. One thing to note here is the comparison to previous fake breakdowns, like the post-ETF dump in January 2024. Bitcoin's dip to $76,000 is starting to resemble those previous events, where the price eventually found its footing and rebounded significantly. Bitcoin is consolidating in a triangle pattern between 80,000 and 85,000, and analysts believe that a breakout above 92,000 could confirm an uptrend. As shown in the BTC S&P 500 in macro uptrend graph, Bitcoin's consolidation within this triangle pattern could lead to a potential 15% breakout. This would be a positive sign for Bitcoin bulls, as the technical pattern suggests that a breakout could send the price soaring. The broader crypto market has also taken a hit, with the total market capitalization dropping by 8.1% to $2.45 trillion. Fear and greed index readings have entered the extreme fear zone, signaling weak investor sentiment across the board. Mark Cuban, billionaire investor, advises against selling Bitcoin during this downturn, highlighting that the market will eventually recover. As Bitcoin continues to mature as an asset class, these short-term price dips are often seen as buying opportunities for long-term investors. The Bitcoin ETF flows graph shows that despite the market's volatility, institutional interest in Bitcoin remains steady. This suggests that large investors are continuing to view Bitcoin as a valuable asset for the long haul, and we could see more buying pressure once the market stabilizes. So what's next for Bitcoin? As we watch the price action unfold in the coming weeks, it's crucial to pay attention to the support levels around $76,000. Will Bitcoin find a floor and start a recovery, or will it face further declines? One thing is clear, the broader market volatility tied to the trade tariffs and global economic uncertainty is making this an exciting, albeit turbulent, time for Bitcoin. Where do you think Bitcoin is headed next? Let us know in the comments below. Stay tuned to Edge 21 for more insights and updates as we continue to track Bitcoin's performance in this ever-changing market. Subscribe, like, and share if you're stacking sats and stacking knowledge. I'm Lockie McWilliam, signing off. Thanks for watching, stay strong, and hodl on.